Hello friends, in the next few minutes I am going to take you through the key events of the recent past and Kotak Mutual Fund's view on equity markets. After 2 consecutive months of large falls in equity markets, April saw a sharp reversal with large cap index Nifty up by more than 5%. Indian rupee, for instance, weakened by 2.5% in April as it broke through a key level of 66 to the US dollar to end the month at 66.8. The Indian bond market also gave up its recent gains of March, with the 10-year paper sliding almost 43 basis points to close almost at the yearly high levels. These were primarily driven by global factors, with crude touching $75 during the month and the US 10-year Treasury crossing the key level of 3% in April. So given this backdrop, the positive sentiment on Indian equities was primarily on account of reasonably in line to slightly positive beat on earnings announced thus far, initial expectations of monsoon being favorable, and geopolitical developments aimed at resolving the trade tensions, especially between US and China. Within sectors, IT was a very strong performer as a beneficiary of rupee weakness, and bellwether TCS strong earnings report catapulted it to the $100 billion mark. Corporate banks, on the other hand, continued to underperform as allegations of personal gains by management of banks gained media coverage, and the NCLT resolution taking more time than expected of a few large cases. With crude reaching $75, oil marketing company stocks were also under pressure, especially as we enter a heavy election calendar. Stocks belonging to FMCG, metals, auto and pharma sectors performed well during April. Earnings released thus far by corporate India and the commentaries by management point to improved business dynamics, and barring corporate banks and US focused generic pharma companies, we expect a healthy trend for remainder sectors as they report earnings in May. With the key state of Karnataka going to polls in May, the electoral verdict may also impact sentiment, especially as we head to general elections in 2019. Indian equities are at crossroads, with improving earnings on the micro front but deteriorating trends on the macro front. Given this and the key event of elections in 2019, we expect heightened volatility for a good part of the coming year. However, equity as an asset class is best suited for long-term goals, and we would advise investors to benefit from this heightened volatility by investing in equities in a regular and disciplined manner. Time in the market is more important than timing the market. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.